Canadian real estate prices dropped 18.9%. Yeesh. The interest rates have clearly affected the entire real estate market, not just in Toronto, even though we're at the center of the world, right? So stay tuned to see how badly our country is reeling from these massive price drops. Borderline crash. Now, if you're looking for some help and information advantage when you're buying or selling real estate, such as the current market right now, because it is starting to shift, and when you see it shift, like we see it shift before you read it on the headlines, you want to act before everyone kind of knows about it, right? So if you want that information advantage, you could book a call with me using the link that's right here. It's www.chatwithzen.com. Simply click on the date and a time that works best for you. And then when you see the prompt, fill in your name, email, mobile phone number, and a question you have for me, and then we'll chat then. Good day, Toronto. Welcome to another episode of Prime Properties TV. My name's Zhen, and I run and operate a RE/MAX brokerage in the Greater Toronto Area, on top of making awesome educational real estate content just like this one for you. Now, if you found any of our content helpful, especially in your real estate journey, whether you're buying your first home, buying your first investment, think about selling your home, or just in general kind of curious because real estate is a national Canadian sport other than hockey, make sure you help me spread the knowledge by smashing that like button and subscribing to the Prime Properties channel. Now, the numbers for the Canadian real estate market came out last week, and similar to the Greater Toronto Area numbers, this would essentially be the peak to the trough comparison right now that everyone keeps wanting to talk about. And oh boy, did our entire country get wrecked. Yeah, entire country. Now, the average Canadian real estate property, fell 18.9% from a year ago before the interest rate hike. That's a pretty big number. As reference, the average Canadian home is about $662,000, down $154,000 from the peak of the market. Pretty wild, right? And just for reference, GTA is down like 21-22% from peak to trough. Now, in this video, I'm going to show you kind of all the numbers from peak to trough, but I'm going to start from 30,000 miles in the air or kilometers in the air from the nationwide and zoom down into the cities of Ontario. Now, do remember, Ontario is 40% of the population of all of Canada. So obviously us as a province will skew the numbers more. And when I say us, I'm talking more about the golden horseshoe, which is effectively just pulling down the averages. Woo! Right? Now, one of the things that are quite similar that you can see in the Canadian real estate market that resembles the Greater Toronto Area is in this chart over here. And you can see that prices actually are rebounding from Jan to Feb as well. Yeah, just let that sink in. Doesn't make any sense, but yes, for most people, but it does for us. And just like the GTA, prices in Canada are up 7.6% or $50,000, which again is a very big jump from month to month. And for reference, in the Greater Toronto Area, it was up 5.5%. Granted, our average is much higher than that 5.5% equates to $56,000 or so, right? But what's important here is the rate of change is actually faster in Canada than it is in the GTA. And again, I've been saying this many, many times. 1 month doesn't make a trend, but a trend does start with 1 month. And we're clearly seeing this in the Canadian national numbers as well. Also, another similarity that the country has to GTA is that prices are essentially flat from July to about January. So the latter half of the year, which kind of looks like, January is also the bottom nationwide if prices continue this way and they continue call it flatline or go up. Now, here's the nation's inventory, and the blue line is basically the month of inventory. And you can see that the inventory was building in the second half, rather little, but it was still building nonetheless. But now it's starting to go down, which means things are getting competitive, properties are being bought. Now, some signs that the Canadian real estate market sentiment is shifting is just not in the GTA. It's all over the place. And you can see that in the red line with the sales to new listing ratio, right? Which is basically how many properties sell divided by the amount of new listings there, right? So the closer you are to 100 or 1, then it's very frothy. And you can see before the pandemic, 80 to 85% of properties are actually selling. But once the rate hike came in, it's down to 50%, which, by the way, is technically still a seller's market. But if you were transacting real estate from July to January, totally did not feel like it at all, right? Definitely felt like a buyer's market. But here's the thing, right? You can see in February, it's starting to trend up again, and it's borderlining getting to 60%, right? Now, the story is very similar, like I've been saying earlier, in this manner where sales are absolutely abysmal, relatively speaking, even nationwide, like down 40% year over year. And you can see that in this chart. But like the GTA, new listings are also down pretty drastically, right? So this is, again, why the nation, the month inventory in Canada is slowly trending downwards right now, just like Toronto. Granted, I think Toronto's trending down faster. So, hovering at 4 months, which is technically balanced. And as a reference point, the kind of Canadian inventory, like months of inventory, has been around like 5 to 6, which is balanced. In the GTA, we're kind of the outliers. We've generally been a seller's market where it's like sub 3 months of inventory. Now, here's a chart here that shows you how each province performed, and you could have expected, ding, 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 we Ontarianians lead the pack with the biggest price drops ever with over 20%, which I've been saying before is technically a crash, technically. And this will be from that time frame only. BC is in, we'll call it not very close second at 15%. And you have, Prince Edward Island and Newfoundland, Labrador actually up year over year, right? The weird thing that I thought that was interesting about this chart over here is that Alberta is actually down 10%, given kind of like where the oil market is and the migration of people to the mountains that we keep hearing in the media, young people moving to Calgary and Edmonton. Strange. And finally, let's break down how bad each part of Ontario was, since we are the biggest contributors to the price decline nationwide. And you can basically see in this chart I created here for you, Southern Ontario was down 23.8%, which is the second biggest contributor. Not first, second in terms of price decline. And this is kind of, where you have the less expensive cities, but within that golden horseshoe where, generally everyone is. And it's very, very like investment heavy base, because in that golden horseshoe area, cash flow is really, really good when everyone's buying a lot of investment properties, right? Now, the biggest contributor, and only by like a smidgen, right, was northeastern Ontario, which was down 23.8%, which includes essentially your cottage areas, right? So you got Kawartha, Northumberland, the Lakelands, Barrie, Simcoe County area, including like the Muskokas, and then you got the other infamous city kind of doubled in price, Bancroft. So that area also suffered quite a bit, into like almost 24%, right? Now, do keep in mind, each city within each region performs differently, just kind of like the GTA. Some cities are better than others, some are a little bit more resilient, right? Which is why in this chart over here in Central Ontario, you got us in GTA, but also includes Milton and Oakville. So it's not just the TREB numbers. And obviously you got your two best performing regions, which is the Eastern Corridor, where the nation's capital is, in Ottawa, including like Cornwall. And when you go into the Northern Corridor, where the start of the corridor is essentially Sudbury, they've also done fairly well, or less bad as well, right? So if you're looking for like a less expensive area to live in, consider those parts of Ontario, where you can get an average home in that area on the east side for like $590,000 right now. And if you go to the north, it's like $330,000, even cheaper, right? So when people are complaining about affordability, there's 100% affordability. It's just that you have to go outside of where 40% of the Canadian population is, the Golden Horseshoe. And finally, I've narrowed down the Ontario regions into like micro regions. From here on, you can't see in the chart over here. And surprisingly, Toronto was not at the top. It was the exurbs of Toronto that you saw the biggest price drops. So if you were following the pandemic trends, it kind of makes sense. I'll leave this chart up here for you if you want to continue looking at it, or you can just pause the video. But now that you're seeing how the Canadian real estate market has kind of shifted, similar to like the Greater Toronto area, I think the trends will be kind of the opposite of what we saw in the pandemic. I do think that we'll probably see a re-urbanization, meaning like a big chunk of people who went out are going to come back. We've been saying that for a while. And the properties that are moving now are generally still freehold, because they are the end users who are buying these properties. And after, the pandemic, people want more space, and the family configuration have changed. Maybe they have kids. We may see some movement upwards for the Toronto condo segment, only if I would say prices continue to be unaffordable in the freehold space and gets more competitive, just relatively speaking, because rates are still very, very high, and I don't think investors are going to be jumping back in anytime soon until the rates come down, right? So where condos are mostly investors, this is why I don't think condo market's going to bump up anytime soon. And when I say rates come down, I'm not talking about Bank of Canada, I'm talking about mortgage rates. So like that could be the fixed mortgage rate, not necessarily the variable that's tied to the Bank of Canada. Now, before I sign off, as I know, this week I've been watching the new listings like a hawk, like every single day, like 2-3 times a day since it's like after March break. And so far the new listings are not looking great. Yeah, there's some stuff that came out here and there, but I don't think it's enough given what the demand is right now. I do think that when the March stats come out in April, it's going to be a little bit interesting, and we'll have a bigger surprise to the upside than most people think. It's an interesting time for sure. Definitely interesting. Now, if you are looking to make a move in the real estate market and you're looking for proper guidance on how to navigate this real estate market and make sure you make the right move, because again, the market is crazy everywhere, you can book a call with me and you talk to me directly. I'll be on the other line calling you, right? Using the link that's right here. It's www.chatwithzen.com. Until next time, your move, your future. See ya. Now that you're done watching this one, how about this one? Oh, you know what? This one's good too. Ooh, this one's really good. You know what? Just watch them both.